Yo, what is up, traders? Welcome to another weekly analysis video where I'm looking at my top three favorite assets, which is gold, EURUSD, and the S&P 500. All right, and just a warning, I have not looked at the charts yet, so you're going to observe me in my natural habitat, how I analyze these 4-hour higher time frame charts in real time to find high quality swing trade setups, day trade setups, and key levels that I'm looking to trade out of and avoid. Okay, so let's start with gold. We're looking at the 4-hour chart, and you can see that we were selling off. In my last weekly analysis video, I was very bearish on the week for gold. You can go and watch that if you want. And we actually caught some really nice clean moves during this sell-off. Now, on Friday, it was a little bit of a different story. We had NFP come out, which pumped gold off the news directly to the moon, about $70 almost. So a very relevant move. It closed on a high of the day. There was no sell-off whatsoever. So for me, that means there's a bit of a shift in the economics for gold. So let's look at the EdgeFinder and see what happened here. Now, this is software that I use where traders have put together a scoring system that determines the overall strength or bearishness of each asset based off the most recent economic reports. So if you want this software, look at it. I'll leave the link in the description of this video. It's very useful. But if we're looking at gold right here, we can see that currently it's got a +4 for a score, which is considered neutral, but it's bullish neutral. All right. Now, if we look down, you can see we have -4 on some assets. Okay, so if we go to the top history, we can see kind of what happened here. And this is the scores over the last month or so. And it was very neutral. And that explains, why gold has kind of been choppy back and forth. And I want to show you something here that I've been flagging for the last few weeks, where we were stuck in this range on gold here on the 4-hour chart. You could also do this on the daily chart if you want. But we're kind of stuck in this range. And the reason why I call it a range is because we have a couple fake outs, right? And then 90% of the price action is inside of this range. So you can see we just got to the lower side of that range there, and then boom, buyers stepped in just off of that news. Like, that was a lot of hype for one news release, but still it is relevant. So the question is, if we look at the score, we've kind of been gaining a little bit of momentum, and then we lose that momentum and we get kind of negative, which explains some of the sell-off. And now we're back to a bit of a positive score. So, I think what we can expect with that type of economic conditioning for what's happening at the moment, the fact that we're back in this range, we really need to find a way to enter the market to continue upwards with gold and retest these previous highs. That's what I expect to see. But we have to make it out of this range, and it might not be as easy as we might think, just because we had an initial overreaction to the news, way too much hype for one day. So I want to see a little bit of pullback here. So how I would navigate an entry for this is, I think the best thing to do would be to just get a fib retracement. And we could even actually drop down to the 1-hour chart just so it looks a bit better. So I'm just going to draw a fib retracement here off the move on Friday. And I would like to enter at this 50 level, to be honest. The 50 level is a nice high value pullback retracement like this, where we could possibly enter the market for a swing trade setup like this. And usually with the stop loss on gold, we go for a swing trade, we go around $25 move with the current market conditions. So I like $25, so we could do that. And for take profit, we could target these previous all-time highs if you wanted, or we could target the top of that range for a nice 1 to 2, which would be a conservative swing trade. You might be in that trade for 2 or 3 days. But if you target the previous highs, you could get like a 4.5 to 1, or you could even do a 4 to 1 if you want to play it a bit safer like that. So that would be a decent swing trade setup for gold. The only thing I don't like about that is the stop loss is really just has no defense against these previous lows. And sometimes the retracement on an initial hype pump like this can be very dramatic. So I would do one attempt on this trade. If it starts to break this key level of the 50 fib, then I'll just wait it out and see if there's a better entry down here somewhere that I could go long gold, so long as the economics continue to align with more of a bullish outlook. Okay, so that's my idea for gold there. For a day trade setup, same thing. I wouldn't be looking for too many shorts now, because if we look at the 1 hour here, we can see that the 9 and the 20 EMA, it's gaining a lot of bullish momentum. So trading a pullback could be dangerous, because this thing could just pump come Monday when the market's open. So let's just see how that plays out. This is my dream level right here to enter gold at the moment, 33.23. So we will see how that plays out. Okay, let's go to EURUSD. I'll go to the 4 hour chart. Now EURUSD, same situation, right? With the NFP kind of a weak bias for the American dollar. If we go to the EdgeFinder, we can see EURUSD has gone bullish again. And if we look at the history, I'll look this up. So we look this up here, and we could see that we were really strong. For like a 2-week window, we lost a lot of strength, and we can see how that translates, right? How that translates to sell-off here. But now we are back to seeing kind of like this shift, a very strong sudden shift. So there could be a really good opportunity here for EURUSD to enter long. But the same type of situation, if we zoom out, there's nothing really, we had such a strong move. We want to see a pullback on this previous initial hype. I don't think jumping on the bandwagon now is a good idea for a swing trade. There's too much risk of a retracement to hit your stop loss. So what I would do to set this one up is I'd probably look for either a retracement off this level, or even better yet, like potentially a psychological even number to enter the market, which would be 1.15000, like that, right? That's a nice clean psychological level, which is also a pretty strong pullback. Not much support resistance, but with this price action, because we broke this previous support here very easily, and that trend line that we had, an obvious trend line that we have, there's not a lot to go off of here. So you could either do something super technical like this if you want to get very conservative. You could wait to see if price can come right here, right, and enter at this level. Or you could go with the psychological level like I might do here and just set up a long here. And with the stop loss, we can go just below that level as well. So 50 pip stop loss would be fair. And then you could really target these previous swing highs, to be honest, like in there somewhere. You get a 4.5 to 1 potential trade setup on EURUSD. All right, so that's my thoughts for EURUSD. Yeah. And then we can go to the SPY here. So this is S&P 500. Now that had some incredible sell-off on Friday. Incredible. So we can see, let's see what percentage that was. So it was about 3%, a 3% sell-off, which is relevant. Okay, so let's go over to the EdgeFinder. Let's see if we can find the S&P. So the S&P is still kind of neutral bullish, right? Let's go over, but we'll take a look. We'll take a look at the history. And as you can see, relative to the historical score, we're hitting 8s. We hit an 11 here at the beginning of the week. And now it's really losing that steam, okay? So once again, even though this S&P 500 is neutral bearish, I still think it's probably dangerous to short this pair in any way, shape, or form. Just because it's in such a strong upward trend. Right now, it feels like it's better to just hold off and potentially look for a high value entry point on this thing to go long, even though it's losing economic strength, right? So a really solid pullback might be something. Sorry, I'm zoomed way out here. We should even go to the daily actually. Here we go. So a really strong level would be potentially be here, right? This is the first one. The previous all-time highs right there somewhere in that zone. I know that's a big zone, but that's kind of like what we can do here. So if you want to be aggressive with this entry, and it's not even that aggressive, a 6100 psychological key level there and a technical key level, that could be a good entry. But you have to see that the price would still have to dump another 2% before we even get there. So it's one of those things where, you know, you're kind of stuck. If you want to enter in on the S&P 500, you might have to be patient here. And that's just the reality of it. There's not a really optimal entry anywhere close by, which is the biggest problem. So yeah, I would say sit on your hands with this. Let's make a dream level. If you didn't see my last swing trade YouTube video, I talk about dream levels and like being very stubborn. There's plenty of assets. You can mark out plenty of dream levels, but the patience will really pay off if you set up a dream level like this, and then you can say, well, if price comes down in there, then I'll look for a trade if everything else is looking okay, right? So that's my analysis of my top 3 assets there, guys. Let me know what you think in the comments, and I post swing trade setups constantly and have lives in my Discord, so I will have the link in the description of the video for my Discord. Please come in, say hi in the chat. I'm always around in the Discord. I appreciate it. And yeah, have a good trading week. I'll talk to you next time.